Hi traders, in this video I'm going to be taking a look at gold. I'm going to be taking a look at the risk events ahead of us here and how that may impact the price of gold. So I'm going to talk a little bit about the fundamentals today, some strength and weakness analysis and some strategy, some key levels behind gold. Now we can see that we have lots of US dollar data this week, but I think the most important data is going to be that on Wednesday, where we've got this CPI event risk. Now we do have Federal Reserve Chairman Powell speaking ahead of that the day before that, but what's important is what the Fed are looking for right now and what's been happening most recently. So the Fed are looking for an inflation rate which comes in lower, okay, because there is talks of them wanting to cut interest rates. Okay, so if they're looking to cut on the interest rates, they want to see inflation move higher, they want to see employment figures come in lower, they want to see things like GDP potentially coming in a little bit lower as well, basically showing a lack of growth. Okay, and that would lead to a potential cut. Now what would help fuel this kind of rhetoric by the Federal Reserve is a lower CPI number. So CPI month on month headline just looking to come in at 0.4%. One of the sort of drivers that has been sort of on the watch of most analysts is renters. Okay, so what a lot of analysts are looking for is how inflation has affected this market here, whether we've seen sort of declines in sort of rents and whatnot. But 0.4% looking at the headline risk in here. CPI year on year actually looking to come in around about 3.4%, so a little bit lower than the previous of 3.5%. And I think what the sort of outcomes we could see is if we get a miss to the upside, I think we're going to see US dollar strength return to the market. If we get the miss to the downside, however, I think we're going to see a US dollar weaken, because that will match what the Fed is talking about here. The likelihood of a cut will increase if we start to see inflation rates come down, because that is the direct talk from the Fed. Going on to the strength and weakness analysis then, basically what I've got here is a gold futures chart. I've got a seasonal chart here, and what I have over this side is the commitment of trader reports, okay? And this is based off a 1 week chart. So on an average of 20 years, May is pretty flat for gold. Typically, we usually see actually range for May and June before seeing a decent rally in July. So on the seasonal side of things, we're looking a little bit flat, or what I would say this is really it's neutral. Okay, so not really any kind of big signs of buying and selling there. So on seasonal side of things, we're fairly neutral. Coming to trader side of things is actually quite interesting at the moment. I don't have the complete up-to-date data here, but the last couple of weeks we saw something interesting. Now the green line are what is known as non-coms. Okay, so non-coms are sort of trend followers, they're sort of hedge funds and whatnot, and then you've got the commercials here, which is the red line. Commercials are in the markets for business, so they look to more hedge the markets. So as price moves down or moves up, hedge funds would be selling more aggressively. Now what we can see here at the moment is the fact that the hedge funds the people that are in the market for business, they're selling quite aggressively. They're doing that because prices of gold is high. You know, if we take a look at this year chart here, you know, the market has been very bullish, you know, so they are going to try and profit from that bullishness in the market and try and hedge their downside risk. The non-commercials, they are buying heavy at the moment because price is in a bullish trend. This orange line here is what is known as a VWAP, which is a volume weighted average price, and it is anchored to the recent swing lows on a higher time frame. So it's an anchored VWAP, and price is above that VWAP. So what does that tell me? That tells me there's obviously more buyers than sellers in the market here for gold. Now, we also have, like I said, that risk event coming up. And what does risk obviously bring to the market? Well, it can obviously bring a little bit more buying into gold. And I can see here, what I have is a 1 week chart here and a H4 chart on the right-hand side, okay? And I can see that obviously on the weekly, we can see that prices breach this kind of consolidation in the markets. And we've started to push higher. Sorry, this is a daily chart, I should say, 1 day, sorry. And prices breach this kind of consolidation. Now, for me, consolidation brings volume, and we can see it in large volume area down here as well, where we had this kind of consolidation there. So I like the idea of price trying to hunt these kind of volume levels and potentially push back to those kind of points. And I think that's what we're going to see if CPI misses to the upside. Okay, now typically I said, well, if the CPI misses to the upside, it could breed some dollar strength, and usually dollar strength means gold weakness. Okay, but we haven't actually been seeing that correlation that tight recently. In fact, you know, the US dollar today, as I'm filming this, has been very bearish, and gold has tracked with that. So that is telling me that really gold is not being necessarily impacted by the weakness in the US dollar, but maybe it's been more impacted, or more sort of had a more effect by the risk in the market. So that to me is kind of looking at this saying, well, okay, well, the market and the US dollar index at the moment and gold is not really correlated right now, and that can happen from time to time depending on situations within the market. And I can see that there's big volume levels down through here. So I think if actually CPI misses to the upside, that's going to create more risk around potential holds of rates higher for longer, or even rate hikes. The market doesn't really want to jump in on things like that. So that could obviously create a little bit of pressure. If CPI misses to the downside, I think that is a little bit more expected in the market, and I actually think we'll probably see a little bit more gold upside potentially coming up into these, okay, because it's expected in the market essentially. So what I like is this area here at the moment. We've got this 4-hour chart here. We've got this consolidation towards 23.21. We're above the 50 moving average here on the H4 chart as well. I like the idea of price maybe coming into this volume level and maybe rejecting it and pushing back to the upside for this week. If we do breach below those kind of 22.65 levels, then I think then maybe we're going to go seek this area of volume as well. You know, looking at stochastics at the moment on a daily time frame, stochastics are bullish at this current moment in time. When they do turn bearish, we can obviously see a little bit of pullback. So, you know, maybe there's a note there that they could see that price continue into higher areas, and that would be sort of my analysis, price coming into that potential area of support. So thanks for watching the video. Hope you enjoyed it. If you did, hit that subscribe button, and I'll speak to you soon.